Hello, good evening. Welcome back to the multi-product break-even analysis discussion. The continuation of the break-even discussion. Previous session, session number 5, we talked about break-even chart, and the last chart was PV chart or profit volume chart. Today, I'm planning to commence a new topic, multi-product break-even analysis. The meaning of this: when a company produces more than one product, how we approach to find out the break-even concepts to interpret using this concept. This concept will be two sections. First section is to use a mathematical calculation as to how we calculate break-even point when we are producing more than one product. Secondly, we will be using diagrammatical analysis or graph, how we produce break-even chart when we are having more than one product to use. Today, I will use one example. This example actually I picked from BPP. I picked this example from BPP. So thank you very much for BPP materials. So this example is from there. Now in this example here, a company producing two products, namely product M and product N. There are two products, product M and product N. Selling price for both of them are $7 per unit, $15 per unit. That's given. Variable cost 2.94 and 4.4. That's also given. Accordingly, the contribution we have to calculate. I have calculated already for the sake of convenience. So the contribution here is 4.06 for product M and 10.60 for product N. Additional information for this concept or this subject or this topic is that we need to find out when producing one M or when producing 1 unit of N, what would be the number of units we would be producing for N. We need to know what are the proportions when having this production in the single factory floor. So accordingly, the product mix given by the question is that whenever product M is produced, when they will produce 5 units of M, they will produce 1 unit of N. So this much was the information available. This much was the information available, and the rest we need to calculate. So now I already calculated, if you see, I already calculated the contribution per unit for both M and N. Then I know what are the product mix. Product M, our mix was 5 units. Whenever I produce 5 units, I will be producing 1 unit. So I have mix here. Accordingly, now I have to calculate the total contribution. I have to calculate the total contribution. The total contribution will be 4.06 multiplied by 5. 4.06 multiplied by 5, I am receiving here 20.30, and 10.60 multiplied by 1, that I am having 10.60. So accordingly, I then have to calculate the total contribution for both the products, because the production is happening at the same time. In the factory floor, using the similar machines, they produce 5 units of M and they produce 1 unit of N in every single mix. So the factory will continue producing several mixes. So therefore, the total contribution here will be, we need to add 10.60 to that. So it is 30.90. So 30.90 is the total contribution that when at this situation. The second thing what you need to do is you need to find out the total mix. So mix we have been given here 5 units for product M and 1 unit for product N. Accordingly, the total mix here is 6. So therefore, when calculating, when continuing this, next step we need to calculate weighted average contribution per mix. Weighted average contribution per mix. So that is, I have to take the total contribution which we have arrived before, and I have to take the total number of mix, total number of mix that we have already calculated. Using these two, we have to find out the average, which you known as weighted average, that is 30.90 or 30.90 divided by 6. This is actually 30.90. So 30.90 divided by 6, we will have an answer of 5.15. So this is the new information or new piece of data that we have to use when come to multi-product break-even calculations using mathematical approach. The next step, we have to calculate the break-even in terms of number of mix. I would like to recall here the break-even point in quantity. What is the formula? From my previous videos, I have given an equation, fixed cost divided by contribution per unit. Contribution per unit. That we have discussed in my early videos. Now here, instead of quantity, what we use here, contribution per mix. Accordingly, you find out the formula here, fixed cost divided by weighted average contribution per mix. So this is the formula we need to use. This formula is slightly new, but almost same. So what we do now, the exam or the question has given the fixed cost. The fixed cost was fixed cost was given in the question 123,600. That was the fixed cost given in this question. So therefore, now we will follow this formula here. Fixed cost divided by weighted average contribution per mix. Accordingly, 123,600 divided by weighted average contribution per mix was 5.15. If you do the calculation here, I am receiving an answer of 24,000 mixes. 24,000 mix. So now we need to find out number of individual products. Now, as per the question, we know that we are producing product M and product N. So, how many units of product M will be there and how many units of product N? In order to find out that, we need to go back. We need to go back slowly and we need to look into the mix. You see the mix here. So, whenever I am producing one mix, I will be producing 5 units of M and 1 unit of N. That is making me total of 6 units. So therefore, here 24,000 into 5 over 6 will be the number of units of M, whereas 24,000 into 1 over 6 will be the number of units of N. Accordingly, if you complete this calculation, so this is 4,000 here, therefore 20,000 units of M, and here 4,000 units of N. This answer is quantity. If we want, we can also find out the revenue or in dollars. How we get this in dollars? You see here, I have the selling price. Now product M, I am having a selling price of 7 and product N, I am having a selling price of 15. So therefore, I will take that selling price here, 7, and here 15. Actually, this is selling price in dollars. So the revenue will be 20,000 times 7, 4,000 times 15. Answer 140,000 and 60,000. Therefore, total revenue when we have a break-even mix of 24,000, the total revenue or break-even revenue, we know what the meaning of this break-even revenue, which is the revenue we require to cover all our fixed costs and to have a no profit, no loss situation of we are making a break-even revenue of 200,000. So this is the first understanding that you should know how you calculate a break-even quantity as well as revenue when we have more than one unit of production. So this is that. Next discussion I will look into in the next video. Please subscribe to my video as well, share this for more information, and please contact me on 9477 654509 or my mail ID atif83@gmail.com or my FB is Muhammad Ashika. Thank you for watching, and I will come back with the further discussions on the break-even analysis in next forthcoming videos. Thank you very much.